Hi, hello, my dear CA final students. The most awaited mighty 50 questions discussion is there in this video, and so this mighty 50 questions is just the index of the overall syllabus. It does not mean that so from these 50 questions only you will be getting questions in exam. If that be the case, definitely I will sell this mighty 50 questions for 1 lakh rupees for one student, okay, because I will be making bigger money if the questions are from this. So definitely it is not, because many students, what they are doing is that they are telling like, so you upload mighty 50, upload mighty 50 so that we will watch this and we will be able to complete our attempt. No, how boss, in this 50 questions you are not able to complete the exam, but this 50 questions is like revision of overall syllabus so that you will get an idea, and of course based on some strategy, so based on past exam questions and the questions of importance and probabilities, so will be considered while preparing these questions, okay. And in this mighty 50 questions, this time I think lot of questions will be on amendments. So due to that reason, for May 25 exams, usually every May exam will be mostly on amendments, but this time the intermediate question paper which was conducted yesterday, so the question paper has very less number of amendments. Surprisingly, for this May, maybe for September they might be asking, okay. And therefore this mighty 50 questions for CA final, so don't think like intermediate. For final, usually there will be questions on amendments and you cannot take it for granted, okay. And here, so I have given what is the source, like each and every question, and what is the concept that is covered in these 50 questions, I have given here clearly, okay. And you can just know that concept also, the relevant concept also, if you want to read that, and you can read that. For that purpose, I have just given this index in this. So question number one, ABC Private Limited, an Indian entity, secured a loan of 1 crore from its overseas affiliate XYZ Incorporation based in United States. The loan was provided at an interest rate of 6% per annum for a tenure of 3 years, with interest being the only consideration charged. Whether the interest on loan paid to XYZ Incorporation is treated as supply and chargeable to GST. So basically, import of services, we have only one exemption, that is other than OIDR services by non-taxable recipient is exempted. And now one more amendment they have added, that is Indian establishment of a foreign airline company importing services without consideration from its holding, that is from its head office outside India. So that is exempted, but other cases and all will be taxable. What about the loan taken by Indian company from its overseas related company? For that we don't have any exemption. So but generally if they borrow the loan within India, there will be exemption. For that purpose, they have brought this circular, and which says that, so if the consideration is represented only by way of interest, then that particular loan taken will not become supply. Suppose if the consideration is other than interest, any other charges, then it will become supply, and it is import of services, RCM, and rule 28 will come because it is the import of service from a related person. So rule 28, valuation rule 28 will be applicable in this case. So you can see here, import of services by way of loans or advances against consideration in the form of interest or discount is not read as supply as per CBSE circular. Accordingly, ABC Private Limited securing loan from XYZ Incorporation against interest of 6% is not a supply, and consequently it is not chargeable to GST. However, if the Indian affiliate pays consideration other than interest or discount, then it will become supply under 71B, import of service from a related person. So value also will be determined under rule 28. Value under rule 28 also will be applicable in this case. So therefore they will pay GST on rupees 1,50,000 to XYZ Incorporation as processing fee. Then question number 2, Tata AIG has insured a motor vehicle owned by Mr. Tharun for a sum insured of rupees 10 lakhs. The insurance policy includes a clause that allows Tata AIG to deduct the salvage value from the final claim amount in the event of a total loss. On 15 June 2024, Mr. Tharun's vehicle was involved in an accident and was declared a total loss by Tata AIG. And what is the insured value of the vehicle? 10 lakhs, but the assessed value of the damage is only 9 lakhs. Now, salvage value is 1,50,000, means after damage, there will be some leftover parts of the car na. So if it is sold, we will be able to fetch 1,50,000 rupees. That is this. Tata AG decides to deduct the salvage value from the claim amount, which means what they are doing. So they are telling boss, anyhow it is yours. and therefore 1,50,000 we will deduct from 9 lakhs. 1,50,000 will deduct and we will give you only 7,50,000. Then that 1,50,000 belongs to whom? That 1,50,000 belongs to the person, that is Mr. Tarun, that is insured. And what he will do? He will sell it. So when he sell it, whether he need to pay any GST on that? No, because it is not in the course or furtherance of his business. So on that 1,50,000 there won't be any GST. And whether the insurance company is required to pay any GST on that sale? No, insurance company, why it will pay? Because that salvage is owned by the insured, so insurance company also will not pay. Now what about this 7,50,000 which is given to the insured? That is like actionable claim and it will not be coming under GST. So basically insurance compensation that is received should not be treated as consideration. Keep that in mind. Okay, then so Tata AG decides to deduct the salvage value from the claim amount as per the terms of the insurance contract. Mr. Tarun retains the ownership of the salvage and Tata AG pays the balance amount to him after deducting the salvage value. Calculate the claim amount. So what is the claim amount? 7,50,000. It is not read as supply in the hands of Mr. Tarun, as the same is not in the course or furtherance of business. And what if it is in the course or furtherance of business? Yes, then it will become supply. Suppose if that particular car is a business asset. Okay, then determine whether Tata AG is liable to pay GST. Of course, even then 7,50,000 will not come under supply. So that salvage when he sells, that only will become supply if it is a business asset also. Okay, then determine whether Tata AG is liable to pay GST on the salvage value. No, because this is not owned by the insurance company, but it is belonging to the insured. Due to that reason, what will be your answer if Tata AG decides to settle the claim amount of 9 lakhs without deducting the salvage value? The salvage becomes a property of Tata AG, which later sells it to salvage buyer. Now suppose if they give entire 9 lakhs, so that 9 lakhs cannot be treated as consideration in the hands of insured, but the salvage is now owned by the insurance company. When insurance company sells that particular salvage, so in that case they will pay GST on that 1,50,000 rupees. So they are selling it to Mr. Kumar for 1,50,000 na, so that will become 71A in the hands of the insurance company. Okay, so that is the answer for this second question. And question number 3 to question number 26. So I have already uploaded questions on amendments. So in my YouTube channel I have uploaded the questions on amendments. You can just go through that questions on amendments. In that the remaining questions are there. So probably I think you would have completed the discussion, completed watching that video. Suppose if you have not, so please watch that video, questions on amendments, and I'll try to put the link of that questions on amendments as a description to this particular video. You can see that. But all these are amendments related questions only up to question number 26. And question number 27 onwards, I have added some new questions, so that I am discussing now. So you can see here question number 27 of MAY'25 questions. The Resident Welfare Association of Kutum Housing Society is registered under GST in the state of Maharashtra. There are 100 3 BHK flats and 100 4 BHK flats in the society. It received or paid the following amounts excluding GST wherever applicable in the months of January and February. Maintenance charges per flat received excluding electricity charges from all 3 BHK flat owners, 7,000 rupees per member per month. Okay, 7,000 per member per month. It does not exceed 7,500 rupees. So per person per month. Due to that reason, this will be coming under exemption. So this is exempted. Okay, then maintenance charges per flat received excluding electricity charges from all 4 BHK flat owners, 10,000 per month per member. So this will be taxable because it exceeds 7,500. So entirely it will be taxable. So basically 3 BHK maintenance charges is exempted, 4 BHK maintenance charges is taxable. Electricity charges with respect to common area lifts and lighting collected from all 3 BHK and 4 BHK flat owners by equally apportioning the bill received from electricity board, bill value 2 lakhs, 1,000 rupees per member per month. So this will be coming under deemed as pure agent. Why deemed as pure agent? Because we have a CBI circular which says that whenever we are recovering the electricity charges on actual basis rather than on ad hoc basis. On actual basis means whatever is the bill that is given by the electricity board, the same amount is being recovered from the members. In that case, deemed to be pure agent and it will not be included in the value. Electricity supplied through its company that has built and maintained solar panels that delivers electricity to various consumers as power backup for common area lifts and lighting on ad hoc basis, 600 rupees per member per month. What about this? 600 rupees per month per member. Okay, this exempted. So first of all, see, it should be included, but basically this is exempted. Why this is exempted? Because they are providing the electricity. In the previous case, they are not providing electricity. They paid the electricity charges and they recovered it from the members. So they are not providing electricity. That will not come under electricity charges. That will come under part of maintenance charges, but deemed to be pure agent, it will not be included in value. But in this next case, they themselves are providing exempted services. We have this point also. When the service itself is exempted, provided by association to its members, that is also exempted. So when that is exempted, it will not be included in the value. Okay. Now, interest received on fixed deposit with Dhanshuk Bank, that is also exempted because interest on loans, advances, deposits is exempted. Generator purchase for the power backup of 4 BHK flats in February. So on this 1 lakh, can we take ITC? Yes, ITC is available. Why? Because 4 BHK flats, outward supply, that is maintenance charges, is taxable. Due to that reason, ITC available on generator purchased for 4 BHK flats. Then taps, pipes and another sanitary fittings purchased for 3 BHK flats in January, 50,000. So ITC cannot be taken. Why ITC cannot be taken? Basically 3 BHK flats outward supply is exempted. As it is exempted, they cannot take ITC on the inward supply. Determine the net GST liability to be paid for the month of January and February, assuming that the GST rate is 18% on all inward and outward supplies. Okay. Now, what we need to do in this case, first we need to take 3 BHK flats and 4 BHK flats. Maintenance charges collected, so 7,000 rupees and 10,000 rupees. We need to take electricity charges recovered by Resident Welfare Association on actual basis will not come because of the circular. Even electricity charges recovered for providing the electricity by them, that is also exempted. So the total maintenance is 7,000 and 10,000. First case, January 3 BHK flats, February also 3 BHK flats exempted, 4 BHK taxable, so 10,000 into 100 flats into 18%, 1,80,000, 1,80,000, interest exempted, so gross GST payable 1,80,000 and 1,80,000. Now, input tax credit in case of January month, they have purchased what? January 3 BHK, ITC not available, so entire 1,80,000 will be their net GST liability, whereas for February on the generator 1 lakh they can take ITC of 18,000. So therefore 1,80,000 minus 18,000, 1,62,000 will be the net GST liability. Now question number 28. So Bharuch Dahej Railway Company Limited, a special purpose vehicle, has been tasked with enhancing industrial connectivity in Gujarat by undertaking gauge conversion projects. During the month of December, the following transaction took place. Indian Railways used the converted broad gauge line for passenger and freight operations. BDRL charged Indian Railways for the infrastructure use under the concession agreement. So we have an exemption. There is a special purpose vehicle which has created the infrastructure for the purpose of railways, and they have given the infrastructure to railways for which railways paid some money during the concession period. So this particular 15 lakhs received will be exempted. Okay. Then Indian Railways carried out the maintenance services. So whenever this infrastructure is provided to Indian Railways, basically, so this SPV should maintain, but Indian Railways is maintaining and they will collect the maintenance charges from the SPVs. So Indian Railways carried out maintenance services including track inspections and repair work for the converted line. Cost of this service was 6 lakhs. That is also exempted. So services provided by SPVs by way of providing the infrastructure to railways is also exempted, and railways providing maintenance services to SPVs against a consideration during the concession period is also exempted. What if it is after concession period? After concession period, this exemption will not be applicable. Then BDRCL leased commercial space at one of the railway station on the converted line to a private logistics company for 8 lakhs per month. We don't have any exemption with respect to that. So that will be taxable. Okay, it is not covered. Indian Railways transported construction materials. So for BDRCL's ongoing infrastructure, see, construction materials is not in the list of notified goods. List of notified goods transported by railways is exempted. What is that list of notified goods? So agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief materials for natural and man-made disasters, defense and military equipment. But construction materials is not there. So due to that reason, this 3 lakhs also will be taxable. So this is the answer for this question, 28. Then question number 29. Charm Limited, registered under GST in the state of Jharkhand, manufactures cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra, as their Del Creditor agent. to sell their products. Being a declarator agent, he agrees to raise invoices in his own name and also guarantees for the realization of the payment from the customers to Charm Limited. Basically, they are raising invoices in their own name. Who? That particular, declarator agent. So they have appointed one person, Mr. Handsome. So Mr. Handsome is raising invoice in his own name, means he is acting on behalf of principal. So therefore, he is supplying, like he is raising invoice, that is supply under 71A, and the principal sending the goods to this agent will become supply under 71C. Now, in order to realize a payment from customer on time, he extends short-term transaction based loans. So loans are given. So when the invoice is raised by him, so when the loans interest is collected, that will come under interest on account of delay in receipt of consideration, and it will not come under interest on loans, advances, deposits. Okay. And Mr. Handsome provides you the following details of transaction carried out during the month of March 2022. Outward supply goods sold by Mr. Handsome in the declarator agent capacity, the 2,80,000 will be included in the taxable value of Mr. Handsome. Okay, so that is what. So Handsome is supplying the goods to the customer, for which the customer pays price plus interest, and the invoice they are raising for 2,80,000, that will be included, and this interest is also includable as per 15(2)(d). How much they are collecting as interest? So 20,000, that is also part and parcel of 2,80,000. What about the commission? Commission, so this is a service provided by declarator agent to Charm Limited. So they are collecting the commission. So that commission also will be taxable in their hands. So these three are outward supplies. So first, sale of goods. Sale of goods, if you see, so they are making sale of goods intrastate transaction. Both are intrastate. So 2,80,000 and 20,000. So intrastate 9%, 9%, whereas commission clearly given as interstate transaction. So therefore it will be coming under IGST. This is their gross GST payable. Now we have some inward supplies. Interstate supply of goods received from Charm Limited. So as the agent is acting on behalf of principal, so in that case the principal sending the goods to the agent will become supply under 71C. So accordingly, what will be the value? The value will be taken as the value as per rule 29, principal agent transaction. As per rule 29, they have given the value as 2 lakhs. So the 2 lakhs will be taken here. Okay. And so 2 lakhs into, is it intrastate or interstate? Interstate. So therefore IGST. So 2 lakh into 18%, 36,000. Then next one, received training in marketing and distribution from Charm Limited as per declarator agent agreement, free of cost. As it is free of cost, will it become supply under 71C? No, it will not come under 71C, because principal agent transaction will come under supply 71C only if it is in connection to goods. If it is not in connection to goods, it will not be coming under 71C. Okay, so services will not become supply if it is without consideration. Accordingly, we don't have anything. So just IGST 36,000. So this 36,000 we will use for payment of 5,400 and remaining for CGST and SGST. So the net GST payable will be 11,700 and 11,700. So this is the answer for this question, and we need to write the notes accordingly for this. Then now we are moving on to next question, question number 30. Mr. Arjun, an individual residing in Mumbai, Maharashtra, inherited multiple properties in Bengaluru and Chennai from his grandfather in December 2024 and rents out these properties for various purposes from December 2024 to various persons. The transactions include a residential property in Bengaluru rented to ABC Private Limited, a GST registered IT company, for rupees 1,50,000, where 70% is used for office purpose and 30% for employee accommodation. So that is the first transaction. So renting of residential property. So nowhere it is given that Mr. Arjun is registered. So now only we need to check whether Arjun is registered, to be required to register or not, because they are also asking us to compute the aggregate turnover. So first, because he inherited these properties, the transactions include a residential property in Bengaluru rented to a company, a GST registered company. Renting of residential property to a registered person will come under RCM. So see this, renting of residential property. So renting of residential property for commercial purpose will be taxable. It's not covered under exemption. And as recipient is registered, it will come under RCM. In case of residential property, if the recipient is registered, once it is taxable, then it will come under RCM. And even though it is covered under RCM, will it be included in the aggregate turnover? Yes, it will be included in the aggregate turnover. Then next point. So thereafter, what has happened? In Chennai, a commercial property is rented to DEF Private Limited for rupees 2 lakhs and GH Enterprises unregistered for rupees 1,50,000. So commercial property, renting of commercial property, supplier is unregistered and the recipient is registered. So then it will be coming under RCM again. So first, renting of commercial property will be taxable. We don't have exemption. The exemption is only what? Minimum 90 days and subject to maximum 20,000 rupees per month, that point. So here it will be taxable, and as the supplier is unregistered and the recipient is registered, it will be covered under RCM. Even though it is outward supply covered under RCM, it will be included in the aggregate turnover. Whereas this 1 lakh GHA enterprises is given na. So in that case, supplier also unregistered, commercial property taxable only, but supplier is unregistered, recipient also unregistered. So due to that reason, it will not come under RCM and FCM, but supplier is unregistered, so there is no GST. As both are unregistered, so there is no GST in this case. Okay, so renting of commercial property to GHA enterprises, so taxable. As supplier is unregistered, recipient also unregistered, is not covered under RCM. Also GST not payable, as supplier is not required to get registered. But will it be included in aggregate turnover? Yes. Even though they are not paying GST, but it is a taxable turnover. It's a taxable supply. Okay, that's a very, very important point. As the same is taxable and covered under FCM, it is included in the aggregate turnover. See, GST not payable does not mean we don't have to include it in aggregate turnover. It has to be included in the aggregate turnover, and had they are registered, they will pay GST na. So due to that reason, so that's a crucial point. Next one. In order to find the corporate tenants, Mr. Arjun hires Better Homes LLC, a Dubai-based real estate agency, to identify tenants and manage tenant agreements. Better Homes LLC charges him 1 lakh for this service in December. Discuss the taxability. So what about this? In this case, it is real estate agent services. Real estate agent services. So from Better Homes LLC, Dubai. So supplier is outside India, recipient is in India, and place of supply also India, because service in relation to immobile property. Immobile property is in India. So it will be coming under import of services. Is it OIDR or other than OIDR? Other than OIDR services. But who imported? Imported by a unregistered individual. But is it for their personal purpose? No, it's not for their personal purpose. That's why it will not come under non-taxable recipient. So import of other than OIDR service by other than non-taxable recipient is taxable, and it will come under RCM. As it is inward supply under RCM, it will not be included in the aggregate turnover. So if you see, only the 3 transactions will come in aggregate turnover. So that is what? First one, that 1 lakh 50, then 2 lakhs and 1 lakh 50. So 1 lakh 50, 2 lakhs and 1 lakh 50 only will come. That is 5 lakhs will be taken as their aggregate turnover. So this is one good question. Then question number 31. Swiggy, a prominent e-commerce operator, collaborates with the Spice House, a restaurant based in Mumbai, for food delivery services. During December 2024, Swiggy incurred input cost of rupees 1 lakh for goods, GST at 12%, and 1 lakh 50,000 for services, GST at 18%. So basically, in case of supply of food through e-commerce operator, liability to pay GST is on e-commerce operator. So Swiggy has incurred input cost of 1 lakh for goods and 1 lakh 50 for services. Can they take ITC with respect to this? Why not? They can definitely take ITC, because we have a CBSE circular which says that even though the applicable rate of GST for supply of food is 5% without ITC, but the e-commerce operator who is paying GST can avail the ITC on their inward supplies, but that ITC cannot be used for payment of GST on food services, but it can be paid for, like that ITC can be utilized for payment of GST on any other services rendered by them. Okay, Swiggy's total revenue from food sales amount to 10 lakhs, 10 lakhs into 5%. So that they have to pay using cash ledger only. So 10 lakhs into 5% they have to pay using cash ledger. Don't forget this. Additionally, Swiggy earned 5 lakhs as commission, platform fees, advertisement fees, on delivery charges. On that they only will pay GST. For that they can use ITC. Okay. So 5 lakhs into 18%, that is 90,000. Out of the food sales, 75% of the revenue was shared with this Spice House. As GST already paid by Swiggy, whatever money that they are sharing with the restaurant, that will be treated as a exempted supply for the restaurant. So that is actually given in the CBSE circular. So these are all based on the circulars only. Okay. Next. The Spice House also directly sold food worth rupees 8 lakhs to customers, GST at the rate of 5%, no ITC. The restaurant incurred material cost of 3 lakhs, GST at 12%, and service cost of 1 lakh. Compute the net GST liability for both Swiggy and Spice House. So first of all, we are taking restaurant. For restaurant, what is the direct supplies? So direct supplies, if you see 8 lakhs and 5%, so 8 lakhs into 5%, 40,000. Can they take ITC? No. The applicable rate of GST to restaurant is 5% without ITC. They cannot take any ITC. So therefore, the net GST payable is only 40,000. Amount received by restaurant from Swiggy, that is 75%, is treated as exempted supply to restaurant. Then when it comes to Swiggy, for Swiggy, what is their outward supply? So first they are providing some delivery services, like other charges they are getting, advertisement charges, etc. So that will be 5 lakh into 18%, 90,000. For that they can utilize ITC. So they have an inward supply of 1 lakh into 12%, 12,000, and 1 lakh 50 into 18%, 27,000. They can utilize this, and thereafter GST payable under RCM, not RCM 9 subsection 5, they have to pay using cash ledger just like RCM. So this 50,000. So even though they have enough credit, remember for MCQ they may twist this, even though they have enough credit, but this 50,000 we cannot use it for purpose of like 50,000 we cannot pay using the credit. So therefore net GST payable will be 1 lakh 1,000. So this will be taken as the answer in this case. Next. Question number 32. XYZ Limited, a registered taxpayer in Tamil Nadu, is engaged in manufacturing, trading and providing consultancy services. Okay. During December 2024, the company undertakes the following inward and outward transactions. Determine the place of supply for each transaction and comment on the nature of supply. XYZ Limited hires a vessel for transporting goods to Andaman and Nicobar Islands from Seeking Private Limited operating within territorial waters with a rental charge of 5 lakhs. Seeking Private Limited is not having any place of business in India, and the vessels are usually anchored in Krishnapatnam Port, Andhra Pradesh. So first we need to determine what should be taken as the location of supplier. So we have section 9. Section 9 says if the location of supplier or place of supply is in the territorial waters, the nearest coastal state should be taken as the location of supplier or the place of supply. Here, hiring of vessel for transporting goods to Andaman and Nicobar Islands from Seeking Private Limited operating within territorial waters with a rental charge of 5 lakhs. Where Seeking located is not having any place of business in India, and the vessels are usually anchored in Krishnapatnam Port, Andhra Pradesh. So what is their nearest coastal state? The nearest coastal state is Andhra Pradesh. So location of supplier is Andhra Pradesh. And what is the place of supply? Renting of vessels. In case of renting of vessels, so for section 12, we have general provisions. As per general provisions, location of recipient. Where is location of recipient? Andaman and Nicobar. So supplier in Andhra Pradesh, and recipient place of supply is Andaman and Nicobar. Therefore, where it will be coming? So XYZ is hiring a vessel for transporting goods. So XYZ is in Tamil Nadu. XYZ is in Tamil Nadu. So location of supplier is Andhra Pradesh, and place of supply will be location of recipient Tamil Nadu. Therefore, it will be coming under interstate supply chargeable to IGST. Okay. The next one, second. An engineering service contract for rupees 15 lakhs is provided to SCZ unit in Telangana with 70% of the work completed on site in Telangana and 30% remotely from Tamil Nadu. Now, what will be taken? So, they have provided services. So, what will be taken as a location of recipient? So, that establishment which is most directly concerned. So, where the majority of the work is received in Telangana, so that will be taken as the location of recipient. So, location of supplier will be Tamil Nadu, whereas location of recipient, majority of the work is completed in Telangana. So, Telangana is considered. So, an engineering service contract is provided to a SCZ unit in Telangana with 70% of the work. Location of supplier. Location of supplier. See here, XYZ Limited is the supplier, na? So, where majorly they have provided, recipient or supplier, both are same. So, that establishment which is most directly concerned. What is the establishment most directly concerned? Telangana in this case. So, therefore, Telangana is considered as the location of supplier and place of supply as per the general provision, that is location of recipient. So, even though both are in Telangana, but it will not be coming under interstate supply. Why? Why it will not come under intrastate supply? Because this is supply to SCZ. Supply to SCZ will be deemed interstate supply. Then number 3, provides repair services worth rupees 15 lakhs to an offshore oil exploration company based in Andhra Pradesh for its oil rig operating in 180 nautical miles. Beyond territorial waters and up to 200 nautical miles from the baseline is also India, and it will be deemed interstate supply. So, because supply after territorial waters 180 nautical miles in Bay of Bengal and the nearest coastal state is Tamil Nadu, that is irrelevant. Only for supplying territorial waters, the nearest coastal state is relevant. So in this case, so we will be deeming it as interstate supply as per 75C, supply in taxable territory but not specified elsewhere in section 7. Next. Question number 33. Mr. Ritesh of Tamil Nadu commenced business as a trader, making supplies only within the state and also has interest income on January 2025 and provides the following information for the financial year 24-25. You are required to find out the aggregate turnover for the purpose of registration. Applicable threshold limit for registration is 40 lakhs and eligibility for composition scheme, and determine the GST payable for the financial year 24-25 based on the following information. First, invoice number 1, date January 2, 2025, sold industrial tools worth rupees 25 lakhs. So yes, it will be considered as their aggregate turnover. Basically, once they cross the threshold limit only, they will go into composition scheme. Here the question is what? Based on the above, answer the following questions. What is the date on which Mr. Ritesh is liable to get registered? So when are they liable to get registered? So they are liable to get registered as and when their aggregate turnover exceed 40 lakhs. So that 40 lakhs aggregate turnover we are computing. So sold industrial goods worth rupees 25 lakhs. Yes, it will be taken into aggregate turnover. And next, received an advance of 4 lakhs from a customer for what? For the goods. Okay, so basically they are engaged in sale of goods. They are basically trader. So goods, whether GST payable on advances? No. So the time of supply will not attract. If they are under composition scheme, carefully listen, if they are under composition scheme, GST payable on advances, but they are now not under composition scheme, so they are coming into composition scheme now. Whether GST payable on advances? Generally no. As per time of supply provisions, GST not payable on advances, so it will not be included in aggregate turnover. Okay, not include aggregate turnover as GST not payable on advances, so still the aggregate turnover is only 25 lakhs. Then supplied spare parts worth rupees 8 lakhs to a buyer. So yes, it will be part of aggregate turnover. So 8 lakhs should be taken. So 25 plus 8, 33 lakhs. Then January 12, earned interest of rupees 1,50,000 from a bank deposit with a nationalized bank. Whether interest is included in aggregate turnover for determining registration? Yes. Only for composition scheme it will not be included. But here up to 40 lakhs is for registration purpose. So it will be included. So 1,50,000 even though exempted, that will be included. So 34,50,000 will be taken. Then supplied dishwashers worth rupees 3 lakhs. So sale of dishwashers 3 lakhs, that is also part and parcel of aggregate turnover. So 37,50,000. Then earned interest income of rupees 2 lakh from a fixed deposit with a scheduled bank. So again, interest on loans, advances, deposits will be included in the aggregate turnover, 39,50,000. Then dishwashers sold on January 18 were returned by customer and a credit note was issued, because of which whether the aggregate turnover will get reduced? No. Because of credit note, the aggregate turnover and all will not get reduced. So we don't have such a provision as per the definition of aggregate turnover. Yes, the credit note is issued, the liability gets reduced, but definitely the aggregate turnover will not get reduced. So therefore the aggregate turnover is still 39,50,000. Then next, paid 3 lakhs to GTA, Goods Transport Agency, for transporting goods to dealers where GST is payable under RCM. So inward supply under RCM, it may be added to your liability, but it will not be coming in aggregate turnover. So still the aggregate turnover is 39,50,000. Then sold mobile phones worth 8 lakhs within the state through an e-commerce operator who deducted 1% TCS under section 52. So sale of mobile phones, so 8 lakhs, yes, that will be taken into the aggregate turnover. So 47,50,000. So because of this invoice number 9, February 5, 2025, their aggregate turnover exceed the threshold limit of 40 lakhs. Due to that reason, they are liable to get registered on February 5, 2025. So that is the answer. As aggregate turnover of Ritesh exceed 40 lakhs, they are liable to get registered on that date, and with respect to invoice 009 onwards, GST will be payable. Okay, and that is the answer for this. Second, whether Mr. Ritesh can opt for composition scheme during the financial year 24-25, that is 24-25. So 24-25 means we need to check the previous year. So previous year, this year only na they commence a business. This year only they commence business. January 2025 only they commence a business. And so following information for the financial year 24-25. So if you see for 24-25, definitely they can opt for composition scheme. See this. As per section 10, a person can opt for composition scheme if their aggregate turnover during the previous year does not exceed 150. As Mr. Ritesh commenced business during the current year, the aggregate turnover during previous year does not exceed 150, so they can opt for composition scheme during current year. Now, if Ritesh opts for composition scheme, what is GST payable by Ritesh based on above data if he opts for composition scheme? If he opts for composition scheme, he need to pay GST being a trader, 0.5% CGST and 0.5% SGST on the taxable turnover. But he is making sale of mobile through e-commerce operator. Isn't he disqualified from composition scheme? No, he is not disqualified from composition scheme because only supply of services through e-commerce operator who is liable to deduct TCS is only disqualified, but supply of goods through e-commerce operator, no disqualification, they can still be into composition scheme. So therefore on this 8 lakhs, okay, on this 8 lakhs, then again there is next one more transaction. What is that one more transaction? 20 lakhs sold LED televisions within the state, so that is 20 lakhs. On this 28 lakhs, 20 lakhs and 8 lakhs, on this 28 lakhs, they need to pay GST at the rate of 0.5% CGST payable 0.5 and SGST payable 0.5. So this will be taken as the answer. Then now we are moving on to question number 34. So this is a very good question. It connects registration, composition scheme and even aggregate turnover, everything. Then question number 34. Tech Solutions Private Limited, supplier in India, manufactures high-tech sensors and microcontrollers. The production cost of a sensor is rupees 1000 and a microcontroller is rupees 800. Tech Solutions Private Limited sells these components to Electro Incorporation Limited, recipient in Singapore. Tech Solutions Private Limited is not selling these sensors and microcontrollers to any other person, as they signed exclusive contract with Electro Incorporation Limited. So basically, now this Electro Incorporation Limited is located outside India, and due to their related party relationship, means they both are related parties, Tech Solutions Private Limited provides a discount selling the sensor at 1200 and microcontroller at rupees 1000. Electro Incorporation Limited integrates these components into sophisticated electronic systems and provides consultancy services relating to the integration. Okay, so basically all these things are provided by whom? Tech Solutions Private Limited. Tech Solutions Private Limited is providing these services to their related party. Okay, and next, so 1200 and 1000, Electro Incorporation integrates these components into sophisticated electronic systems. So there is another paragraph. Tech Solutions Private Limited has provided a corporate guarantee to Electro Incorporation Limited for a loan facility of 50 crore taken from Global Bank Limited Financier to fund the integration of components into electronic systems for a period of 3 years. The guarantee implies that if Electro Incorporation Limited defaults the loan, Tech Solutions Private Limited is liable to repay the loan. This guarantee impacts the financial terms and overall risk assessment of the transaction. However, Tech Solutions Private Limited has not got consideration towards such corporate guarantee. However, if Tech Solutions Private Limited gives such guarantee to any other person, they charge a one-time fee of 0.5% of the loan amount as guarantee commission. Compute the value of taxable supply of the above transaction on which GST is payable by Tech Solutions Private Limited. So first transaction, if you see, they are making sale of goods. Okay, so first they are making sale of goods to whom? They are making sale of goods to a recipient. That recipient who is further processing. Electro Incorporation Limited integrates these components into sophisticated electronic systems and provides consultancy services. So it is used for further processing and supply. That's why resale price into 90% cannot be taken. Okay, so first proviso not applicable. Also, as there is no information about the recipient eligible for full ITC, so therefore open market value cannot be deemed to be transaction value. So transaction value of 1200 and 1000 cannot be considered as open market value. So like, kind and quality is not available in the given case. So what we need to do? We need to take cost plus 10%. What is the cost? 1000 and 800. So 1800 plus 10%. So 1100 and 880 will be taken as the value. Rule 30. Rule 28 read with rule 30. Then we have corporate guarantee one rule, rule 28 sub rule 2, that 1% of the guarantee amount or guarantee amount per annum or the consideration whichever is higher, but that is not applicable in this case. Why it is not applicable in this case? Because the recipient is located outside India. Valuation rule 28 sub rule 2, so for corporate guarantee to related person is not applicable if the recipient is located outside India. However, in such case a value will be determined as per rule 28 sub rule 1. What is that? Like, kind and quality or open market value that should be taken. So here like, kind and quality is one time fee. Usually for others that line is given. So usually they charge a one time fee of 0.5% of the loan amount as guarantee commission. So that will be taken here. So like, kind and quality 0.5% of 50 crores, because 50 crores is the guarantee na, 50 crore. So 50 crores into, we don't have to see the period. See that period 3 years and all will come into picture only when it is rule 28 sub rule 2. But when it is rule 28 sub rule 1, very simple. How much usually they charge? So that will be taken as the like, kind and quality. So 0.25 crores will be taken as the answer in this case. Okay. So this point may also be tested in this case, because corporate guarantee will be applicable, that is valuation under corporate guarantee rule 28 sub rule 2 is applicable only if the recipient is located in India. Okay. Next. Question number 35. XYZ Private Limited, a construction company based in India, undertakes large-scale infrastructure projects. XYZ Private Limited entered into contract with DEF Limited for constructing a commercial building. The contract details and timeline of events are as follows. Contract details: total contract value 20 crores and paid by DEF Limited on the date of contract. So January 1st, 2023 itself the payment is received for entire amount. Duration 24 months. So payment terms: milestone based payments. So it is definitely a continuous supply of service. As a service takes more than 3 months to complete and involves periodic payment obligations. Applicable GST rate initially 18%, change it to 20% during the contract period. Change in rate with effect from August 1st, 2023. Contract commencement date January 1st, 2023. Milestone event is there, date of completion is there, date of invoice is there. During the project, XYZ Private Limited encountered issues leading to cancellation of a portion of contract. As a result, DF Limited requested a refund of GST paid on the cancelled portion. Cancellation details also given. You are required to determine the applicable rate of GST with respect to each milestone event and what is the amount of refund payable to the recipient. First of all, we need to apply section 14. This is services. Section 14, we need to check whether the supply is before change in rate or after change in rate. So here, date of completion of milestone event June 30, 2023. June 30, 2023. So is before change in rate. As supply is before change in rate, first case, June, it is before change in rate. As it is before change in rate, so what should be taken as the time of supply? Invoice date or payment date, whichever is earlier. Okay, supply before change in rate, whichever is earlier should be taken. So what is the invoice date? Invoice date for this is 5/7/2023, whereas payment is 1/1/2023. Whichever is earlier will be 1/1/2023. So accordingly, applicable rate of GST will be 18%. So that should be taken, because if you see, completion is before change in rate, payment also before change in rate, invoice also before change in rate, everything is before change in rate. The applicable section is not section 14, the applicable section will be section 13. Section 13 will be applicable, not 14. Be careful. Section 13 will be applicable. And section 13 also says what? It says if the invoice is given within due date, invoice date or payment date, whichever is earlier. If invoice is not given within due date, completion date or payment date, whichever is earlier. What is the due date here? 36/2023. 36/2023 is the due date of invoice, but the actual date of invoice is July 5, 2023. So due to that reason, completion date or payment date, whichever is earlier, but payment date is only earlier. Completion date 36/2023, payment date also, so 1/1/2023, whichever is earlier is 1/1/2023. So 18%, simple, no issue, because completion date or payment date, invoice date or payment date, earlier date is payment date only. Here there is no confusion. And section 13, 14 will not come. Why 14 will not come? Between 3 dates, if there is no change in rate, so section 14 will not come. Okay, then next one. So second event, if you see, December 31st, 2023. December 31st, 2023 is after change in rate. When it is after change in rate, but the invoice is also after change in rate, but the payment is before change in rate, section 14 will come, and as one event before, one event after, whichever is later will be taken. So January 5, 2024 will be taken as the time of supply, whichever is later. Same way, next case, June 30, completion after change in rate, payment before change in rate, invoice after change in rate. So whichever is later, July 5, 2024 will be taken, and at that time 20% is only the rate. And last case, December 31st, 2024, completion after change in rate, payment is before but invoice is after. So therefore we need to take whichever is later. So whichever is later is January 5, 2025. So 5/1/2025 will be taken. 5/1/2025, at the time also the rate will be 20% only. This is the applicable rate now. So during the project, XYZ Limited encountered issues relating to cancellation. As a result, DF Limited requested a refund of GST paid on the cancelled portion. Cancelled portion value 5 crores. Cancellation date October 1st. October 1st, 2024. So now what is the rate that we need to take? First, GST payable on advance. On advance, already 20 crores into 18%, because old rate was 18%, na 3.6 crores they would have paid. Now GST credit note to be issued for the cancelled portion, and that credit note is part of this 20 crores. So 5 crores into what is the rate? GST rate will be 18%. Why 18%? Because even though it is given now, but it pertains to the transaction which commences at the time. So that's the reason why 18% will be taken, and a credit note is issued within the time limit. Okay. So due to that reason, that will be taken. You are required to determine the applicable rate of GST with respect to each milestone event, and what will be the credit note value also. This is the answer. Then question number 36. Rudra Limited raised invoice for services of rupees 1 lakh excluding GST at 18% on 15/9/2023 and reported the same in their GSTR1 of September 2023 filed on 11/10. So 15/9 they raised the invoice and they reported in September 2023 filed on 11th October. Abhi Limited, who is recipient of such service, availed ITC in 3B of September filed on 18/10 and utilized the same in 3B of November filed on 2012-2023. So what is the date of utilization? 2012-2023. Rudra Limited has not filed 3B with respect to September 2023, and Abhi Limited reversed the ITC of December 2024. Actually, if the supplier has not filed GSTR 3B by September 2024, okay, that is next financial year, September 2024, then recipient should reverse the ITC by 30th November 2024, but they reversed on December 2024, filed on 17/1/2025, means interest will be applicable in this case. Compute interest payable by Abhi Limited and consequences with respect to ITC if Rudra Limited files GSTR 3B of September on 18th February and discuss whether any interest is payable by Rudra Limited, assuming no other transactions are there for Rudra Limited. First we need to see the date of utilization. The date of utilization will be 2012-2023 and interest will be computed till the date of reversal. What is the date of reversal? Date of reversal will be 17/1/2025. So what is the number of days for which we need to compute the interest? So date of utilization will be due date of 3B or actual date of 3B, whichever is earlier, both are same here, and actual date of 3B is only taken for reversal purpose. Number of days, so in 2023 we have only 11 days, and then 366 days in 2024, and in January 17 days, so 394 days. For 394 divided by 366, we need to compute this interest. Okay, then so as and when Rudra Limited files GSTR 3B, so in the next year, so whenever they are filing, when Rudra Limited files 3B of September on 18 February 2025, because that is also given, and consequences with respect to ITC if Rudra Limited files 3B of September on 18 February 2025. So what will happen? Whatever ITC that is reversed by Abhi Limited can be re-availed without any time limit. Okay, but this 3,488 interest cannot be re-availed, and as 3B is filed late, Rudra Limited also should pay interest. So as 3B is filed late by Rudra Limited, they need to pay interest at 18% from which date? What is this month? So October month, September month. September month 3B they should file by 20th of October 2023. From there till the actual date 18/2. So how many days? So October 11 days, November 30 days, December 31 days, then again 2024 full year, 2025 till February. So 487 by 366. This 4311 will be payable as interest. So there are two interest computations in this question. So this can also be connected, supplier side as well as recipient side. Next, question number 37. Messrs. Omnitech Manufacturing Private Limited, a registered taxpayer under GST, is engaged in manufacturing and trading of industrial machinery. The company operates 3 manufacturing units and 2 warehouses with multiple transactions involving domestic sales and exports and supplies to SEZ. Okay, and January 2025, Messrs. Omnitech encountered several complaints issues related to accounts and records maintenance, and GST department issued a notice under section 35 of CGST Act citing irregularities in record keeping. Yes, as per section 35, so if there is any discrepancy in the accounts and records, a notice will be given deeming such missing information as deemed to have been supplied. Okay, and determine whether GST authorities can demand tax on unaccounted goods found at the warehouse, and the legal provision supporting such an action, whether any penalty is levied in this case. First of all, as per section 35 subsection 1, every registered person is required to maintain certain accounts and records in their principal place of business, and accounts and records pertaining to additional place in every additional place of business. And there is one more subsection as per section 35 subsection 6, where the registered person failed to account for the goods or service in accordance with the provisions of subsection 1, the proper officer shall determine the amount of tax payable and invoke the provisions of section 73-74 recovery. Got it? And in the present case, department can issue notice under 73 or 74 by considering such unaccounted goods as supplied and accordingly initiate the levy of penalty in terms of such section. And what will be the penalty? As it is, 73, 10% or 10,000, whichever is here. 74 means 100%, depends. What is that? Whether intention or no intention. Intention to evade is there, intention to evade is not there, depending upon that. Okay. Then question number 38. Messrs. Greenfield Agro Private Limited, unregistered entity in GST, specializes in the cultivation and supply of organic herbs. The company plans to introduce a new product line, herbal extracts, intended for use in the pharmaceutical industry. Given the ambiguity in the tax rate for such products, Greenfield Agro seeks clarity on the applicable GST rate before launching the product. Assess whether Greenfield Agro Private Limited qualifies to apply for advance ruling under the GST provisions. So whether a registered person or unregistered person can seek advance ruling. Okay, so therefore in this case, even if they are unregistered but making supply of goods and intending to register, can apply for advance ruling. Determine the statutory period within which the advance ruling authority is required to provide a decision once the application is submitted. Once the application is submitted, within 90 days, from the date of application, they need to pronounce the ruling. So within 90 days from the date of receipt of complete application. Then discuss the extent to which advance ruling will be binding on Messrs. Greenfield Agro Private Limited and the GST authorities. Once the advance ruling is pronounced, it will be binding on the GST department as well as on the applicant. Okay, till the time there is no change in law. If dissatisfied with the advance ruling, explain the process through which Messrs. Greenfield Agro can appeal against the decision, including the appellate authority to be approached and the time frame for filing such appeal. So they need to go for appellate authority for advance ruling, and they need to file with the application fee of 10,000 rupees, 10,000 under CGST, 10,000 under SGST, and they need to make appeal within 30 days. 30 days from the date of ruling, and it can be extended for a further period of 30 days, and they should issue decision, appellate authority for advance ruling, within 90 days, and it is final unless challenged in High Court or Supreme Court through writ petition. So this is a question based on advance ruling. Then question number 39. Purva Impex Limited, a registered entity under GST in the state of Maharashtra, is engaged in making various supplies. It is not engaged in agricultural operations. Purva Impex Limited, India, is a subsidiary of Purva Incorporation, an entity incorporated in USA. So basically they are entity registered in the state of Maharashtra, and they are basically a subsidiary of Purva Incorporation entity in USA. Providing information means Purva Incorporation and Purva Impex Limited in India, Maharashtra, they both are related. It provides the following information for the month of April. So they have given some outward supply details. Basically this is your comprehensive question number 1. undertook the promotion and marketing of information technology services on principal to principal basis in India for Purva Incorporation. So this is what they are basically providing services, promotion and marketing services. Okay, so you can see here promotion and marketing of information technology services to Purva Incorporation. Basically it will come under export of services. How? Supplier in India, recipient outside India. Promotion and marketing means, so general provision section 13, location of recipient and how the consideration is being received. Okay, that information is not given about the consideration in this case, and even below also there is no information. So therefore we are assuming here, see, all exports made by Purva Impex are through furnishing of LUT without payment of IGST. So we are assuming that it is export of services and there is a consideration that is involved in convertible foreign exchange. So due to that reason, it will qualify as export of services, and moreover it is export under bond or LUT without payment of IGST. So just amount will be there, but there won't be any GST liability with respect to this. Then next transaction, so it should come in statement 1. So we need to prepare in 4 statement. Statement 1, so statement showing GST payable on outward supplies under FCM. Number 2, statement showing GST payable on inward supplies under RCM. Statement 3 will be ITC, and statement 4 will be computation of net GST payable. Okay, then next one, printed letter card supplied to Subhashini Enterprises registered in Maharashtra. A logo depicting the vision of the firm was to be imprinted on each letter card, and the said logo was provided by the firm. Material cost was 8 lakhs and printing cost was 72,000. So entire 8 lakh 72,000 will be taken, because there is a circular which says that when we are doing printing activity, we are only buying the material required for printing and doing the printing activity. If the paper constitutes principal supply, in printed letter cards, definitely paper constitutes principal supply. So it will be treated as supply of goods. Okay, and supply of goods to Subhashini Enterprises in Maharashtra. Where are these people located? Maharashtra. So usually ending point will be taken as a place of supply. So therefore intra-state supply. And in case of goods, what is the rate of GST? So see this, 18% for both inward and outward supply of services, and rate of GST 6%, 6%, 12% for both inward and outward supply of goods. So due to that reason, 8,72,000 intra-state supply, ending point N1A, so 6% and 6% will be taken. Next, that is again in statement 1, outward supply. Third one, supplied raw cotton to Tara traders registered in Maharashtra. The raw cotton was purchased from the local farmers during the previous month. So supplied raw cotton to Tara traders. So whenever they are making supply of raw cotton, will it be coming under RCM? No, it will not come under RCM. Only sale of goods by an agriculturist. Moreover, company will not come under agriculturist. So due to that reason, it will be FCM only. First outward supply 5 lakhs. Supply of raw cotton 5 lakhs within the state. So therefore it will come under FCM. So 5 lakhs and 5 lakhs, but we have got a different rate, except in case of supply of raw cotton, where the applicable rate of GST is 2.5% and 2.5%. So that's why 2.5 will be taken. And they are also purchasing it from the farmers, like that one line is given. So a local farmers during the previous month, not in the current month. Na? So therefore this will not be applicable as inward supply for the current month. This will become inward supply of the previous month, on which they need to pay GST under RCM. So don't take it for current month. So it will not come under inward supply now. Okay, it will not come under anywhere in inward supply. So for this month. Next one, another transaction you see, supplied maintenance services to Municipal Corporation of Greater Mumbai, which was awarded a contract of maintenance of street lights in Greater Mumbai municipal area. Maintenance work involved the replacement of defunct lights and other spares. So they are providing services, composite supply of both goods and services. And out of the total value of supply of 1,20,000, value of defunct lights and other spares is 32,000. So we have one point, if the value of goods does not exceed 25% of the total, so then in that case it will be exempted. So we need to see 32,000 divided by 1,20,000. So that will come to what? 26.67%, means it exceeds 25%. So therefore it will be taxable 1,20,000, and it will be coming under section 12 subsection to general provisions. So location of recipient same state, and therefore 1,20,000 into 9%, 1,20,000 into 9%. Then next one we have given on hire 10 cars, seating capacity of 5 persons including driver, to Gujarat State Road Transport Corporation. We will not get the exemption. Why? Because hiring a motor vehicle that can carry more than 12 passengers is only exempted, but in this case it is not. So due to that reason it will be taxable, and supplier should be other than body corporate for RCM, but supplier is body corporate, so it will be FCM. So on the 3 lakhs we need to pay GST. So you can see 3 lakhs, and moreover, so we need to see the location of recipient in another state. So it will be interstate supply. They are in Maharashtra, Gujarat. Interstate supply chargeable to IGST 3 lakhs into 18%. Okay. Then next one we have, so this just got repeated, the supply of printed letter cards. So this is just a repetition, same copy paste of above row. And then inward supply, purchased processing machines from Bobby and Co, registered under GST in the state of Gujarat. Machines were brought in as is where is condition at Gujarat to produce taxable items. So basically in this 5 lakhs we don't have to pay any GST under RCM, but why can't we take ITC? This is one question where many students have got the doubt. Purchased processing machines from Bobby and Co, registered under GST in the state of Gujarat. So supplier is in Gujarat. As is where is condition means what? So recipient is only taking the delivery there, means supply does not involve movement of goods. When supply does not involve movement of goods, what will be taken as a place of supply? Location of goods, because it is sale to registered person. Location of goods at the time of delivery. Where is the location of goods? In Gujarat. Therefore it's an intra-state supply. But we cannot take ITC because CGST, SGST paid in another state. We cannot take ITC with respect to this. Okay. So first of all, it will not come under RCM, and won't it come under ITC? No. So because CGST, SGST paid in the other state, we cannot take ITC with respect to this. That is the crucial point. Then next one. So next related to metal scrap, purchased metal scrap covered under chapter 72 from Manshuk traders of Maharashtra, an unregistered person, to be used in manufacturing process. So metal scrap, supply of metal scrap by an unregistered person to a registered person is covered under RCM. So on this 2 lakhs, we need to pay GST under RCM. Metal scrap, the rate given is 9%, 9%, 18%. So first we need to keep it under RCM liability, metal scrap, and also it will be taken in ITC as well, both 2 treatments. Then next one, another transaction what we have, procured information technology service for its business through electronic mode from Thomas Incorporation, a company located in Germany. So information technology service, import of services. So is it by non-taxable online recipient and all, like non-taxable recipient, etc.? No, it will be taxable and it will come under RCM normal 1,50,000 into 18%. 1,50,000 into 18%. So we don't have any exemption, it will come under RCM. So 18%, 1,50,000. Next, and also we can take ITC with respect to that. So in ITC column also it should be kept. A machinery to be used for manufacturing was sent to George Incorporation USA for carrying out repair work on the same. The consideration to George Incorporation was paid for such repair work. Machine was received after repair in the month of May. So machine to be used for manufacturing was sent to George Incorporation USA for carrying out repair work. The consideration to George was paid for such repair work. Again it is an import of service, and 5 lakhs. So see this, 5 lakhs into 18%. 1 second. Yes. Machinery sent out for repair work. So what is the place of supply? Since the place of supply of repair service is outside India, being location where the service are actually performed. Yes, because location of supplier outside India, location of recipient in India, section 13 will be applicable. And what will be the place of supply? Location where service are actually performed will be taken, because physical presence of the goods are required. So accordingly it is outside India. As supplier is outside India, place of supply outside India, there is no GST with respect to the transaction. So it will not come under import of service, because in order to become import of service, the place of supply should be in India. Okay, so that point is applicable here. The company provided the following information. Purva Incorporation USA provided a corporate guarantee of rupees 1.5 crore on behalf of Purva Impex Limited to Money Bank Maharashtra free of cost. So whether Rule 28 sub Rule 2 is applicable? Yes, because the recipient is in India, so it will be applicable, and it is moreover import of services. So 1.5 crores into 1% will be taken. You can see here, first RCM, corporate guarantee, 1.5 crores into 1%, 1,50,000 on which GST paid. Moreover, this can be taken as ITC also into 18%. This can be taken as ITC. So corporate guarantee point. Next, another transaction, last over, everything got over. Rate of GST, all amounts given above are exclusive of GST, and from the information you are required to determine. So we got the gross liability, total output tax, gross liability, RCM liability. If you see, so this metal scrap, these two, so 75,620, 75,620 and 54,000. ITC, metal scrap purchased, so that one, and information technology services and corporate guarantee. So therefore 18,000, 18,000, 54,000. Now this 18, 18, 54 we will adjust from this, so that net GST and GST payable under RCM, total net GST payable. So we will get the answer with respect to this. So this is an RTP question. It's a good question. So connecting some amendments etc., but it is little lengthy. So therefore you need to little bit focus and exactly see every point and arrive at the answer. Okay, see the next question. Jigar Infra Limited, a registered supplier under GST in the state of Kerala, is engaged in the construction business. He availed legal service relating to a business dispute and paid rupees 7 lakhs as consideration for the same, and that is a legal service. And here he also purchased construction material amounting to 15 lakhs from Chirag Steels Limited, registered in the state of Andhra Pradesh. Further, for transport of materials, it purchased a new truck from a dealer in Kochi, Kerala by making a payment of 12 lakhs. So it provides the following information relating to its outward supply for the month of April. In the first paragraph, they gave some inward supply details, and related to this inward supply, so we need to check whether that legal service is taxable or exempted. So turnover of Jigar Infra for the previous financial year is 180 lakhs. Definitely it will be taxable, and legal service will come under RCM. So tax on legal service is payable under reverse charge by recipient of service, and from where they are receiving the legal services, he have a legal service related to business dispute, but we don't have any information about where the legal service is received. But we have one line here that we need to consider the transactions. All the above amounts are exclusive of taxes wherever applicable. You are required to compute the minimum net GST payable, and reason for treatment needs to be given in this case. Okay, so within the state only he will be taking legal service. So it's an intra-state supply 7 lakhs, and that will come under RCM. And what is the rate of GST that is given? The rate of GST is 9% and 9%. So therefore you can see here RCM 63,000 and 63,000. Then next one, another, he also purchased construction materials amounting to 15 lakhs. It is not RCM, but can he take ITZ? So basically he is a builder, he is into construction business. So on that 15 lakhs, so you look into the ITZ statement. So purchase of materials, so construction materials. So I think there is some extra information related to this, so we will continue with that. Construction materials point, and then transport materials, because some information will be there. It provides the following information relating to its outward supply for the month of April. Purchased goods from a party in Taiwan, sold goods to a party in Turkey without bringing the goods to India. So means outside the country movement of goods. Purchase value of 5 lakhs and sale price was 7 lakhs. The figures in rupees have been given after conversion to transaction was in convertible foreign exchange. So outside the country movement of goods is neither supply of goods nor supply of services, because it is not a supply. Then next one, transferred one load of tiles to its branch in Kochi, Kerala from its head office at Trivandrum, Kerala. Both places are under the same registration. Both are under the same registration means it is not a transaction between distinct person. Consequently, again, it is not a supply. Then next one, provided pure labor services of construction of a single commercial unit not forming part of any complex to a customer in Bengaluru, Karnataka. Where are they located? They are located in the state of Kerala, means it's a interstate supply, because the place of supply in case of service in relation to immovable property is location of immovable property. We have one exemption, that is pure labor service in relation to construction of a residential unit is exempted, but it's a commercial unit. Due to that reason it will be taxable. So 15 lakhs into 18%, that will be taken as the liability. Then next one, supplies a consignment of marbles in territorial waters to Surya Builders LLP. So the territorial waters are located at a distance of 11 nautical miles from the baseline in state of Kerala and 12 nautical miles from the baseline in the state of Tamil Nadu. So what is the nearest coastal line? Kerala. So it's an intra-state supply. So 6 lakhs into 9%, 6 lakhs into 9%. Then received an advance for future supply of goods and services from a customer in Kerala. Services. For out of such advance, 70% is related to future supply of services. So 7 lakhs into 70%. Okay. And on that only GST will be payable, because on goods we don't have to pay any GST. So these are the outward supplies. The company provides the following additional information. Paid 6 lakhs as remuneration to independent director. It's an inward supply covered under RCM and based at Cochin within the state. So CGST, SGST paid. You can see here RCM. So remuneration 54,000 and 54,000. And next transaction, the company claimed depreciation under Income Tax Act on the new truck purchased including taxes. So we cannot take ITC with respect to this truck purchased. On this 12 lakhs truck purchase, we cannot take ITC. Why we cannot take ITC? Because we have added the GST component also. Due to that reason, ITC not available. You can see here, purchase of truck, motor vehicle used for transportation of goods is eligible for credit. However, since depreciation has been claimed on applicable taxes as well, ITC of tax paid on purchase of such truck cannot be claimed. Okay. Then payment of remuneration to independent director, we can take ITC with respect to this. Arbitrator service also we can take ITC, and this remuneration also. Then next one, e-invoice portal. So from Chirag Steels we purchased some material, construction material. So for that they have given e-invoice portal, shows that Chirag Steels Limited GST number is liable to issue invoice. However, they have not issued e-invoice. Basically they can take ITC on the construction material, but e-invoice is not issued. So means it's not a valid invoice. So consequently ITC cannot be availed on purchase of materials from Chirag Steels. ITC not available. Okay. So this is about the ITC 1,17,000 and 1,17,000, and RCM liability is also given, and thereafter you can arrive at the net GST payable. So it's a little simple question. So it's a 14 marks question only, but little simple. We don't have that many adjustments related to this. Then next one, question number 41. In an appeal, this is an RTP question. In an appeal filed with the High Court by Pratik Limited on the question whether activity undertaken by Pratik Limited amounts to supply, the appeal was decided in favor of Pratik Limited. The amount of tax, interest and penalty involved were IGST 1.2 crore, interest 60 lakhs and penalty 50 lakhs. Whenever tax, interest, penalty, everything is involved, just see the tax for finding the monetary limit. However, department does not agree with the order passed by the High Court and contends that the said activity amounts to supply under GST. The department wants to file an appeal before the Supreme Court relating to the dispute pertaining to demand of tax, interest and penalty. For Supreme Court, what is the monetary limit? 2 crore is the monetary limit. So, you are required to examine whether the appeal can be filed by department in the given case. Will your answer change in case the matter is related to valuation of service instead of determining whether the said activity is supplied? First, so for GST 80, 20 lakhs, High Court 1 crore and Supreme Court 2 crore. That is the monetary limit. If you are crossing that monetary limit only, you can go for appeal. Okay. Further, where the dispute pertains to demand of tax with or without penalty and or interest, the aggregate of the amount of tax in dispute including CGST, SGST and compensations only shall be considered while applying the monetary limit for filing appeal, that is 1.2 crores in the given case, and it does not exceed 2 crores. Okay. So, however, the circular further provides that monetary limit specified above for filing appeal, so shall not be applicable in case of following circumstances. When the provision is ultra vires the constitution or ultra vires the act or ultra vires the rules, that point is there. And one more important point is there, where the matter is related to valuation of goods. So under that point, if the dispute is related to valuation of goods, then definitely they can go for appeal even though the monetary limit is not attracted. Okay, so this is purely based on amendment and it's an RTP question, and you can just remember that, that's important. Next, question number 42 onwards. So some 8 questions, 9 questions I gave it on customs, okay, and FTP. You can see this. And this question, Mr. Manmeet imported certain goods from his son, Mr. Harbhajan, residing in US, and the transaction value has been rejected. Rule 4 and 5 of customs valuation. Determination of value of imported goods are found inapplicable as no similar, identical or imported. Manmeet furnishes cost data of imports and requests customs authorities to determine the value accordingly as per Rule 8. That is customs computed value. The relevant data is given below. And customs authorities are of the opinion that since the value as per Rule 7 can be determined at 5 lakhs, there is no need to apply for Rule 8. So depends. So we can decide between Rule 7 deductive value or Rule 8 computed value. Can the request of Manmeet be legally acceptable? If so, compute the assessable value under the Customs Act 1962. So when we determine the value as per computed value, or generally when the ex-factory cost is given, usually there is a confusion for the students. So there are 2 different ways of arriving at the answer. One is, so when we consider the FOB value, so in the FOB value there will be freight cost from the factory gate to the port, and on that FOB when we take 20%, okay, so 20% of FOB when we take, it is from the factory gate. So that's why what we need to do, first we need to arrive at the FOB and then multiply with 20% of FOB. And now whatever you get as 20% of FOB includes even the freight from factory gate to the port, that should be excluded. So remaining only we need to add. This is the treatment. So but ICA has done little differently, but they arrive at the same answer. So let me give you both the ways so that you will get an idea. First, cost of materials incurred by Mr. Harbhajan. So $2,000 we will take. Fabrication charges also will take. Other chargeable expenses 400. Other indirect cost 250. Freight from Harbhajan's factory to US port and loading charges at US port 100. Okay, so now everything will be taken, and all this if you add you will get cost. Okay, all this when you add you will get cost. So how much the cost comes to, you see that 2000 plus 1000, then 400, then next 250, then 250 and 100. So this will come to $4,000. So the cost is $4,000. Okay. Now what is the FOB, like profit? Profit will be 20% of FOB. FOB is sale price. When you add profit only you will get, FOB. So if it is 20% on FOB, then on cost how much? 25%. How? Let 100 be the sales and profit will be 20 on sales, then cost 20 by 80. 20 by 80 is what? 25%. So therefore 4,000 into 25% is what? 1,000. So $1,000 when you add you will get FOB, and that FOB will be $5,000. Okay. Now they have given air freight. So what we need to do air freight? Actual or 20% of FOB. So 20% of FOB is what? 5,000 into 20%, 1,000 or 1,500, whichever is lower, 1,000. From that 1,000 you take out these 2 freights, freight and loading charges, because factory gate onwards when we take 20% it will be from factory gate onwards, but it is already considered in FOB. So therefore these 250 plus 100 you take out. So 1,000 minus 350, $650 will be added as freight, and insurance will be 50. So therefore it will come to $5,700, that we need to multiply using 85. So 5,700 into 85, that will come to 4,84,500. So even they did also same, we did also same, we end up with the same answer. But what presentation they have changed is that, so up to this they have taken 2,000, 1,000, 400, 250, cost 3,650 they have taken. Got it? 3,650 they have taken as cost, and then freight from factory to US port and FOB value if you see 5,000, but that is taken in inner column. That 5,000 is taken in inner column, and profit margin 20% of FOB, so that is 1,000. So therefore add, that is 20% on FOB or 25% on cost, and freight and loading 100. See, they have not added in the outer column this 250 and 100. 250 and 100 not added in the outer column here. That's why only 1000 is directly taken in the outer column. Okay, but otherwise we need to do. So anyway you can do, you will end up with the same answer. This is relatively easy to understand. So please follow this presentation, but definitely you will get marks, don't worry. Okay, see, it is about how either we eat this or we eat this. Both way you are eating only, correct or not? So they will not deduct marks and all for this. Next. Question number 43. Green Peppers Company imported goods valued at 20 lakhs while bill of entry presented before the proper officer on 15 July, on which date the rate of customs duty was 10%. Green Pepper Company Limited has produced all the necessary documents and furnished full information. However, the proper officer deemed it necessary to make further inquiry, and therefore the same were provisionally assessed at a value of 20 lakhs. Yes. So whenever for want of documents, they can go for provisional assessment, and Green Peppers Company paid provisional duty of 2 lakhs on the same day. On the same day they paid, no issue. So usually what is the time limit for payment of this provisional duty? Within 1 working day, but they paid on the same day. Determine the amount of interest payable if any under section 18, provided that Green Peppers Company voluntarily paid duty of 50,000 on 20th August. Final duty is assessed at 3 lakhs. And they paid the balance duty on the date of assessment of final duty. So what is the final assessment? 3 lakhs minus provisional assessment 2 lakhs. What is the differential? 1 lakh. How that 1 lakh they are paying? So first 50,000 they paid on 20th August, then they paid it on 31st August. And what is the interest computation date? Starting from the first day in which provisional assessment is resorted. So which date provisional assessment is resorted? So 15 July, but we need to count from 1st July. So we need to count from 1st July. 1st July to 20th August. So in July 31 days and in August 20 days. So that is 51 days for 50,000. Then again in case of second, so July 31 days, August 31 days, 62 days. So we need to compute the interest accordingly. Then question number 44. XYZ Manufacturing Private Limited imports aluminum products from China. It has recently been reported that the government of China provides substantial subsidies to its aluminum producers, including direct grants and tax rebates. XYZ Manufacturing imports the consignment of aluminum sheets from China. The government of China provides a subsidy of $100 per metric ton of aluminum in the form of direct grant to the producers. It's a subsidy given by the foreign country. Following the imposition of countervailing duty, XYZ Manufacturing begins importing aluminum coils from Vietnam. Because China, if import, there is anti-subsidy duty. However, during an inspection, it discovered that these coils were initially produced in China, exported to Vietnam, and then re-exported to India. 6 months after the countervailing duty was imposed, the central government observes that the export price of aluminum sheets from China has decreased by 10%, but the resale price in India has not decreased proportionately. Can the central government levy countervailing duty in the present case? Yes, they can levy countervailing duty on aluminum sheets. And what is the maximum duty that can be levied? Equal to the subsidy amount. What will be your answer if they are 100% EOU? Import by 100% EOU, there is no anti-subsidy duty. However, it is clear to DTA, then it is applicable. Can they apply the measures to aluminum coils imported from Vietnam? Yes. If they try to circumvent the anti-subsidy duty, they can extend it, the same notification, to imports from Vietnam also. What action can the government do if the export price got reduced after 6 months? That is called as absorption. Whenever there is a decrease in the export price without commensurate decrease in the price in India or any value addition or etc. international price, in that case, so exporter is trying to reduce the price to offset the countervailing duty or anti-subsidy duty. If the export price is reduced after 6 months, the central government can modify the duty to counter the absorption and ensure the effectiveness of the countervailing measure. Then question number 45. Kankan Corp had imported a machine from USA for rupees 365 lakhs on payment of appropriate customs duty in February. However, in July, the machine has to be sent back to the supplier for repair, not amounting to manufacture, from the factory of Kankan Corp. This machine was repaired and thereafter re-imported by Kankan Corp in November next year. The supplier has agreed to provide discount of 60% of the fair cost of repairs, resulting in Kankan Corp paying $12,000. But fair value should be taken. This is notification 45 of 2017. In case of 45 of 2017, please remember, so the time limit given by ICAI in the study material is not 3 years. The time limit is given is 5 years plus 2 years. So that is the updated time limit which they have given. So even though in the RTP, MTP we have 5 years, 3 years, but you please replace it to 5 years plus 2 years. Okay, then so we need to, whenever the goods are imported and sent for repairs and again it is re-imported, we need to pay customs duty on fair value of repairs. So after discount 60% is 12,000, means 40% is $12,000. Then what will be the 100%? So that 100% we need to arrive. So what is that 100% will be taken? $30,000 will be taken as the fair value. Then freight and insurance both ways, you add everything. So this is the freight and insurance both ways. So you will be getting assessable value. On that assessable value, regularly we need to compute the customs duty, the basic customs duty, presentation of bill of entry or arrival, whichever is later. So 26 February, so 15% should be taken as the rate. Social welfare surcharge 10%. IGST rate is given here as 12% you take, but for exchange rate always bill of entry date 62 rupees should be taken as the exchange rate, 62 rupees should be taken. So we get the total customs duty payable. It's a simple question. Then question number 46. Gregory Pegg of foreign origin has come on travel visa to tour in India. He carries with him as a part of baggage the following travel souvenir. Tourist of foreign origin can bring a travel souvenir, any limit like that is allowed, exempted. Other articles carried on person, dutiable 1,50,000, 120 sticks of cigarettes, 100 only comes under general free allowance, remaining will be 110%. Firearms with 100 cartridges, value includes value of cartridges at 500 rupees per cartridge. So 100 into 500, 50,000. So remaining 50,000 is for the firearm. Determine customs duty payable if the effective rate of customs duty is 38.5% inclusive of social welfare surcharge. First, travel souvenir nil. Articles carried 150. Only 100 sticks you take, 10,000. Cartridges up to 50 you take, that is 25,000. So total 1,85,000. Tourist of origin only 15,000. So baggage on which duty will be payable 38.5% will be 1,70,000. That is only the question. But you also write the note remaining. So remaining 25 cigarettes. Remaining 25 cigarettes because 100 sticks. So cigarettes exceeding 100. So 120. 20 into 100. So 20 into 100, 2,000. And then firearm 50,000, and then cartridges beyond 50, so that will be 25,000. So total 70. So see this, cartridges into 50, 25,000, firearm 50, and 2,000 will be cigarettes. So total 77,000. We need to take 110%, 84,700, like that you show as the note. Then question number 47. Messrs. AMTL Limited Kolkata imported CNC grinding machine from Catalyst Incorporation USA, complete with accessories and spares in October 2021 for use in manufacture of high precision micro tools. Basic cost of the machine with accessories is 50,000 with accessories, means accessories cost is already included in that 50,000. So Catalyst Incorporation supplied one extra set of accessories valued at 2,000 free of cost to cover the transit damage. So now in that case, when they are giving it free of cost, means it's part and parcel of this particular 50,000. Okay, you see that note 1. Sale price of machine is deemed to include the value of accessories. So therefore this extra set of accessories is already there in that 50,000. So therefore they don't have to add it separately. So this will be taken as the FOB 50,000. Warranty cost payable to Catalyst Incorporation 4,500. So consideration payable to exporter. So that should be taken. And next one, design and development charges paid in USA, not in India, outside India, that should also be included. So 6,000 will be taken. License fee is required to be paid in USA, should be taken. Value of drawings supplied by AMTL Kolkata free of cost and is necessary for customizing machine to the needs of AMTL. But where these drawings are procured, not given, so it's not procured. See, AMTL Kolkata is giving, but where is it procured? So therefore we take the assumption here that it is procured outside India. So therefore this 1,000 also should be included. Okay, and if you add this, you will get the FOB value. Buying commission will not be taken, and thereafter air freight is given. So once we get FOB and convert into Indian rupees, air freight 20% of FOB or actual, whichever is lower, and insurance not ascertainable, so 1.125%. We get the assessable value and convert into Indian rupees using the rate CBIC exchange rate 66.5. So we get the assessable value in this case, and we need to give the notes related to this. Then question number 48. XYZ Imports Private Limited is an importer of various industrial goods into India. The company recently faced several issues with imported goods that are found to be defective or not in conformity with the specification agreed with the supplier. XYZ Imports Private Limited is considering applying for a refund of the import duty paid on these goods under Section 26A of Customs Act. Based on the provisions of Section 26A, analyze the following scenarios and determine the eligibility for refund of import duty. The company imports a consignment of specialized machinery from Germany. Upon inspection, it is found to be defective. So, whenever the imported goods are defective or not conforming to the specifications, then in that case, it has not been used or worked on after importation, and they decides to export. Yes, refund is possible in this case. Since it is exported without being put to use, refund of customs duty is applicable. The company imports a batch of electronic components from Japan. After the components arrive, they are found to be faulty and suitable for intended purpose. XYZ Imports Private Limited choose to relinquish its title. Yes, even in case of relinquishment of title also, they will be able to get the refund. The company imports a batch of perishable goods. In case of perishable goods, refund under Rule 26A are not possible. Since the goods are perishable, have exceeded the life, so refund is not possible under 26A. The company imports a batch of computer hardware from Taiwan. Upon inspection, it is found that the hardware does not meet the agreed technical specification. The hardware is neither exported nor relinquished, but instead donated. No, you will not get refund under 26A. So it should be what? Either exported or destroyed or relinquished. In other case, you will not get the refund under 26A. This is a question related to refund under customs. Then 49 question, ABC Exports Private Limited is a major exporter of textiles from India. The company is eligible for duty credit under the Customs Act and FTP. Recently, the company has made several exports and now they are considering utilizing the duty credit available in their electronic duty credit ledger to offset customs duties on their upcoming imports. Answer the following questions based on the application. What is the validity of the e-script generated? The validity will be for a period of 2 years from the date of its creation, and it can be utilized for payment of only basic customs duty, no other. And next, can ABC Export Private Limited transfer? Yes, they can transfer it to another IEC holder. And after duty credit is allowed, a scroll for duty credit is generated, and ABC Exports Limited now want to combine this duty credit with another duty credit. Is it possible? No, it is not possible to combine. So fully it can be transferred. Okay. So therefore, in the present case, ABC can combine the duty credit from scroll generated with duty credit from export to create a single e-script. Single e-script, scroll only generated. So two scrolls can be combined to generate one e-script, but that e-script fully it can be transferred. Okay. And next, last question. ABC Exports Private Limited is a major exporter of various products from India, including textiles, synthetic fibers and other goods. The company is keen on leveraging the remission of duties and tax on exported goods scheme to refund unrefunded duties and taxes. So RODTEP. In case of RODTEP, they have given the notified rate of as 2% of FOB value. Export of cotton fabric to US, such fabric is produced entirely in India. Yes, eligible for RODTEP, 50 lakhs into 2%, 1 lakh. Export of synthetic fiber to Europe, the synthetic fiber is imported from China. See, and fabric is manufactured in India, but fabric is manufactured in India, so we are eligible. If the goods are imported from one country and exported to another country, then we are not getting, but in this case it is possible because raw material imported and finished goods are exported. Export of batch of goods to a customer in Africa, however the sale proceeds have not been realized within the time allowed. Even then we will claim, but if you are not able to realize the proceeds, then we need to pay back that. But now you can claim the rebate in this case. Next, export of products manufactured in 100% EOU, previously not allowed, but now even if it is manufactured in 100% EOU, it is allowed. So we can enjoy the RODTEP. Export of defense uniform materials to various countries, however such goods are subject to minimum export price. If the goods are subject to minimum export price, RODTEP is not possible. So in case of this 10 lakhs, it is ineligible. So the total RODTEP benefit is 2,90,000. With this, we completed 50 questions. Okay, so already the questions or amendments and the remaining questions I have just discussed with you. Okay, thank you. And so whatever support that you are required, so like we will be discussing, like I will be available in Telegram, so please join in the Telegram, and even please do subscribe to this channel so that if there is any update, I will post it in this channel. Thank you, take care, bye.